Sanjay Kumar, Managing Director of IGL, joins us now. Mr. Kumar, good morning. Thank you for joining us. Now, volume growth has been tapering down. Is this largely because of the price hike which has happened and it is having impact on the demand for say?
Good morning, Nikunj and the team at TT Now, and the viewers also. Good morning. Uh, in fact, we look at it the other way. The volume has actually grown. We used to sell 7.66 in the last quarter, and this quarter we have sold about 8.12 million cubic meter per day, which is a growth of 6%. So the volume has been maintained. The margins have been slightly lower because of very high cost of APM, non-APM gas. This quarter, it was priced at about $8.57 per MMBTU as compared to the last quarter when it was around $6. So Q3 cost side has actually led to slightly lower EBITDA and PAT also.
So, despite developing new geographical areas, your volumes are flat sequentially. What does that mean? What does that mean as far as a trend is concerned?
So the growth is there in the volume. It's only 6%, and the pricing has slightly impacted the conversion. It used to be 18,000 vehicles or more than that few quarters away. This quarter it was about 13,000 vehicles uh, per month. That is the impact. There is cost pressure, but however, we are happy to acknowledge Kirit Parikh committee report, which has recommended that the price of APM, non-APM gas, which primarily makes the volume which is supplied to CNG, should be brought down to about $6.5 from $8.57. We are awaiting its approval by the government, and as soon as it is implemented, we will have better margins.
So, Mr. Kumar, just to put it into perspective, the incremental volumes, will they be coming in only from new areas or new geographies?
No, the volume, the new geographies are actually, we are commissioning new pipelines there, the steel pipelines, which will add to volume. There will be exponential growth in new geographies after this quarter, because in both in Ajmer as well as in Muzaffarnagar and Kanpur, we are adding new pipelines. Now, the moment they come, the sale shifts from daughter booster station to online station, and that the sale will pick up immediately thereupon. Uh, in Delhi, the volume growth in the Delhi and NCR, which is our mature GA, the volume growth will mature and will not be so much. It will be within 5 to 10% growth coming in coming years per year.
Fair point. But because of high gas costs, Mr. Kumar, your margins have been on a downward trajectory. International gas prices have receded from their peak. And like you were also highlighting, Kirit Parikh committee has also recommended for lower domestic gas prices. So where then do you see your EBITDA unit margins for FY24?
So FY23, I had earlier told you we will maintain 7 rupees per SCM, and we hope to maintain better than that for 24, because we are very sure that the government will approve this committee report that we are talking about, and that will add approximately 6 to 7 rupees per SCM in our margins as soon as it is approved, which is likely maybe in February, maybe in March. That is what we expect, we hope.
Or March, Mr. Kumar, I just wanted to understand, given the fact that the recommendation of the Kirit Parikh committee was submitted a month back, was there any sort of a disagreement over the recommendation, or any reason as to why it was delayed?
No, I don't see any delay in the implementation of recommendation. These are usual, the processing time that takes for approval of anything which has been established since 2014. And there is we have not heard of any disagreements. You see, any committee which actually sits on a issue like this, it has to see both sides of the matter. So one side, there are sellers who are selling this gas to the industry, and the other side, there are consuming companies or the distributing companies like us, the CGD companies. There has to be a balance, and we don't see any conflict in this whole discussion.
Fair enough, and you expect the committee report to be implemented by March. Wanted to understand as well what your outlook is in terms of your expansion plans over the next few years. What's lined up?
So, as of now, our new GAs, the sale is basically through, daughter booster station. We are commissioning steel pipeline, and we would very soon have 50% of sale from the GAs outside Delhi. And the basic infrastructure for the same has already been lined up, and some of them are in commissioning phase, and we will be flowing gas in those steel network pipeline, and that will help us get the volume from outside Delhi area also.
Thank you so much for taking time out and joining in, Mr. Kumar, giving us a view on IGL as well as the outlook on the EBITDA unit margins and the recommendations for the Kirit Parikh committee.